Rehda, the umbrella body for property developers, repeated its call for Putrajaya to take over the building of affordable housing. The association said leaving this role to the private sector only means that prices of open market units will be pushed up. Rehda President Dato' N.K. Tong explained that the developers practice cross-subsidizing affordable housing developments, often sold below costs, by raising prices of open market units. This has put the latter out of reach of the country's middle-income earners, which means regular projects have higher risk of becoming late, sick or abandoned. Tong said Rehda supports Prime Minister Datuk Sri Anwar Ibrahim's call for the affordable housing requirements imposed on property developers to be reviewed. He said amid government initiatives such as Scheme Simen Rahmah to address cement price hikes, more needs to be done, adding that Rehda is ready to discuss with the government and industry players on how to make home ownership more accessible. Hydroshoppe Director Dato' Abdul Hamid Sheikh Abdul has applied to strike out a corruption charge filed against him. He was charged on April 5th with offering a bribe of 500,000 ringgit a year for 15 years for the benefit of Tan Sri Anwar Musa in connection with the takeover of the KL Tower concession. This was confirmed by his lawyer Amir Hamzah Arshad. The notice was filed on the grounds that the charge against Abdul Hamid Sheikh was flawed and unfounded, as it did not meet the requirements for the offence under Section 16BB of the MACC Act 2009. It also stated the charge failed to comply with the provisions of Sections 152, 153 and 154 of the Criminal Procedure Code because one of the important details in the charge, which is the date, was not specified in the charge. The KL Sessions Court set June 19th for both parties to file their written submissions and July 18th to decide on the matter. The EPF has decided to vote against Mr. DIY Group Malaysia's proposed renewal of authority for the company to buy back its own shares in its annual general meeting next Thursday. The pension fund said in its voting decision notice on its website that it believes the home improvement retailer should instead utilise its cash balance to pay higher dividends to shareholders. According to Bloomberg data, EPF is a substantial shareholder and the third largest stakeholder of Mr. DIY with a 5.38% stake. Mr. DIY has a total share capital of 9.43 billion shares, of which 1.04 billion shares are floating in the open market. Based on its latest financial statement, the company has cash and bank balances amounting to 1.36 billion ringgit as at March 31st. Mr. DIY declared an interim single-tier dividend of 0.6 sen, a payout of approximately 56.6 million ringgit for the first quarter of FY 2023. Its shares closed 2.58% higher at 1 ringgit 59, valuing the group at 15 billion ringgit. IOI Properties Group has redesignated Lee Yeow Seng as its Chief Executive Officer, effective from July 1st. Lee, currently the group's Executive Vice Chairman, replaces Dato' Voon Klin Yeow, who will be retiring on the same day. Lee, who previously held the position of the CEO of IOI Properties from early 2014 to 2020, is also a non-independent, non-executive director of IOI Corp. He and his siblings, Dato' Lee Yeow Cho and Lee Yok Ha, who also sit on the board of IOI Properties, are major shareholders of the company through vertical capacity, which owns 3.62 billion shares, equivalent to a 65.67% stake. Lee himself holds 71.32 million shares, representing 1.3%. Meanwhile, Voon caps a lengthy 39-year career in real estate, which included senior positions with developers SB Satya and EcoWorld Development Group. He was appointed as the CEO of IOI Properties on April 15, 2020. At the close, IOI Properties shares were down 2.7% at 1 ringgit 7 sen, giving it a market capitalisation of 5.89 billion ringgit. The IMF sees Malaysia's economic growth moderating to 4.5% in 2023, due largely to external headwinds. Its executive board said in a statement that inflation is projected to remain elevated at 3.3% this year, with likely persistence in core inflation amid a positive output gap and evidence of a build-up of demand-side pressures. Over the medium term, it expects the current account surplus to widen as pandemic-related travel curbs are lifted, leading to an improvement of the services balance and as imports moderate. Downside risks, mostly external, cloud the nation's near-term outlook. The IMF said external risks include the possibility of an abrupt global slowdown or recession, with an associated spike in global risk premia, capital outflows and sudden stop risks. Geoeconomic fragmentation and geopolitical tensions resulting in a reconfiguration of trade, supply disruptions and rising input costs, among other disturbances, could negatively affect Malaysia's growth prospects.